Welcome to my YouTube channel. Today I am going to talk about two defensive stocks. If you look at just on Friday, market touched the all-time high, and the same day it retreated by more than 240 points or so. So I think up to election results, which is 4th of June, there will be a lot of variation which will keep on coming to the market. A lot of fluctuation which will happen. And normally, 6 months from the result date, market really doesn't rise much. That is what historically we have seen in India in last 5 elections. So keeping all those in mind, I think it's a time to really invest in defensive stock. Defensive stocks are those stocks which really do not fall heavily when the market falls. So let's say market falls by 10%. Defensive stock in that condition might fall by 5%. But when the market rises, if you pick up defensive stock at a good price, it might go up quickly. So from that perspective, I thought let us look at some of the blue chips, defensive stocks, which are very good buy at this point in time. And today I am going to discuss about that. So what I'll do is I'll first talk about the market scenario, overall scenario. Then I'll talk about the specific industry from where I have chosen these two stocks before covering that particular stock. And then I'll go in depth on the valuation of that specific stock and make my observation. So one thing I like to mention here, investing in stock is always risky. So please do consult your financial advisor or do your own study before you invest. The purpose of this video is purely educational. Second thing I like to tell you that education in finance, investment is very important. And if you are willing to spend about 20 hours of your time over a period of time, you can do a fantastic job. You will be able to understand the basics because whether it is my video or somebody else's video, your understanding is very essential. And I have brought a set of courses for you. Please do visit drbishram.graphy.com and look at some of the courses. There is a free course and there are some courses which are paid. I'm sure you will like those and look forward to welcome you there. So let's move forward. Today, if you look at the overall market scenario, let's take at the largest market of the world, which is US. There, there have been a lot of fluctuation and recently the market has broken out, like it has taken a turn. So what the analysts say is 2 to 3 years bull run coming to the US market. Now, when there is a bull run in US market, India market also will follow suit. Luckily in India, the bull run has started about 6 months back. So I suspect that next 2.5 years, you will see bull run. Bull run doesn't mean only one way traffic. Normally, the general trend will be upwards, but there will be fluctuations. There will be reactions coming at different point of time. So if you have a good selection of stock, what you could do is you could keep on accumulating those stocks whenever you get opportunity. That is about the overall market scenario. I suspect at the time of election result, because market has already discounted about 400 seats for the NDA alliance. So if there's a shortfall, let's say 360, 370, there could be a temporary reaction in the market. So that can be taken as an opportunity, and therefore it is very essential that you sit on some cash. And in my last video, I talked about booking profit in a particularly a small and mid cap, because whenever you get opportunity in a small and mid cap, and if you book some profit and sit on the cash, you can utilize that for buying stocks when the opportunity arises. So let's move forward. The first stock I have brought from a consumption sector. And as you know, consumption sector, what it means is like a company like ITC, company like Hindustan Unilever, Nestle, they have not been doing very good. Britannia, they have not doing very well in last 2 years actually. So one stock I have brought from that sector. So consumption sector, the news is that this industry is going to pick up. So good news is that since it has been in a very short range in the last 2 years, anytime there could be breakout in the sector. And this year, even monsoon is supposed to be normal. So let us expect that the consumption demand starts going up. So if that comes, all the stock in the sector will benefit. And therefore, I am bringing to you a stock known as Hindustan Unilever. This is a stock I think all of us use their products in one way or other. And if you look at this particular company, it's a fantastic company. So let's go forward and look at the performance of this company. So this company, if you look at in last 2 years, let's look at the prices of the price fluctuation. Let's look at 10 years data. Here you see that they have been like in from 17 to 21. They have been a very good run. Like here the price was 900, by 21 they achieved 2700. So almost three times in 3 years time frame. And 21 onwards, if you see, this had been range bound. And today it is at the lower end of the range. When you look at the P ratio of this particular company, see, there's nothing wrong with the performance. The quarterly EPS has been going up. And last 2-3 quarters it is at the same level. But the P, since the performance has been going up, the price has not moved up. Performance, the P has come to 50, which is very good P for HUL, because here median P is about 61 and today this stock is available at 50 P. If you move forward a little bit and look at some of the other stocks in the sector, you will see that this P is very reasonable. You know, they are all MNC stocks and it is cheapest amongst the MNC stock. And very interesting thing over here is if you look at the Hindustan Unilever growth, ROE is 20% and sales variance for last 3 years has been 10% and EPS variance is about 8%. 10% is not that bad. And economy is likely to grow at 6 to 7%. This company will be growing at 10% in the given condition. If the consumption thing picks up, the growth will be much better. So from that perspective, what it looks like is, you know, this company offers a very good opportunity today as a defensive stock to really take a position. When you look here, the compound profit growth, see, last 3 years is 8%, price growth is minus 2%. So whenever you have a mismatch like this will pick up sooner or later. So just to sum up this, there is a reasonable growth in this sector. Consumption is likely to take upward trend, and the consumption takes upward trend. This company also will pick up much better than 10% growth it is having. Since it has been consolidating for 2 years, 3 years time frame now, chances of this going to a higher level is much higher. And from that perspective, this company offers a very good opportunity for buying. Let's look at some technical chart at this point in time. Hindustan Unilever. Technical chart, if you look at, see here. These are the three averages, 200 days, 50 days, 20 days, and 7 days. The stock is trading at all lower than all three averages. The RSI is very reasonable. If you look at the Bollinger Band, that will give you a better idea in my opinion. So Bollinger, if you look at, just see here. To me, it appears like at this price, it will consolidate for some more time, and could be that from here it will start looking up. So chances are very good that it's a very good price. So what I suggest is there could be a downward movement of maybe another 2-3% or so, but it is a very good price to procure. So what I'm doing is accumulating at this price. So therefore, the persons who already hold this Hindustan Unilever, if he doesn't want to put a new fund, well, sit on this. Don't sell in panic. You will certainly make money. And if you want to add slowly at this price or maybe a little lower. And you know, whenever the market is, you know, like taking a downtrend on a particular day, that day you can take a position and keep on accumulating. And I'm sure if you do this, you will get a good return on this price. The second stock which I'm bringing to you is again a very big company, known company, very famous company, leader in the sector. One of the leaders in the sector. Let me rectify my statement. The company comes from IT sector. Like consumption, IT has not done great job in this move so far. So I think whenever you pick up a stock which has not moved, chances of moving is high. And I did mention in the beginning that defensive stocks are very good. So IT sector as of today is a defensive sector, very good earning and good potential, consistent earning, good dividend. So you benefit from both. Both in HUL and IBC you will get 2.5% plus dividend. So from that particular perspective, if you invest, the savings bank return is coming to you anyway, and it has got a much higher potential. So the stock which I'm bringing to you is the Infosys, a great company promoted by Mr. Narayan Murthy. Now, when you look at the chart of Infosys, let's go and look at the chart of Infosys. It is trading at 22.6p. The stock dividend is 2.68. Imagine, this is very good. And ROE 32%. Sales growth in last 3 years has been 15% plus, and profit growth also in this period had been almost 11%. So there have been some pressure on the margin, which appears here, but nothing wrong with the company. And as per the report, Statistica had projected 5 years outlook for IT industry, IT services sector. And what they believe is the sector is going to grow at 10.49% CAGR. Now, economy will be growing at about 7% CAGR. So, any sector which is growing more, it is defensive stock, beaten down stock at this price. It is a very good opportunity. Look at here. Again, it is trading lower than 200 days and 50 days moving averages. When you look at the PE, you will see that PE again. It is trading much below its median PE, which is about 29, 26.4. It is trading at 22.4. One more thing I like to show here, whenever you look at these, the three top stocks here in IT services sector, TCS, Infy and HCL Technology. If you compare there, the PEG ratio for Infy is 2.04, best amongst all three. The growth, the sales variance is 15% against best amongst all three. EPS variance is little low, so there have been no pressure, and P is 22.59, which is lower than even HCL Technology. So this stock certainly is a proper candidate for moving up. And when you look at this, even the compound profit growth, which I showed you last time, last 3 years, 10% profit growth, but 1% price growth. So there is a great opportunity as in this stock, as a defensive stock. So let's look at the technical chart. So here, if you look at the technical chart, Infosys technical chart, same situation. It has picked, came to 1700, then it is consolidating at about 1400. RSI is at a sell level. So this stock appears a great stock for buying at this price. There's nothing wrong with the company in terms of growth potential, industry, and as you know, the whole European market has been going through trouble, and these companies are exported in US, Europe, and other countries actually. Like Germany is in recession, Japan also is going through recession, UK had got a huge inflation problem. So this is not going to go for a long time. So next couple of years, this is going to pick up. Infy is a well-managed company. HUL is a well-managed company, though both are giving 2.5% plus dividend. So from that perspective, what I say is, if you invest in these two companies as a defensive sector, next 2 to 3 year time frame, at least 50% upside potential appears to be there. So it will give you around CAGR of 18 to 20%, which is a very good return coming from these stocks. So friends, today in the given market, I covered two stocks. Both are defensive stocks. One was from consumption sector, which is Hindustan Unilever. Second is from IT sector, which is Infosys. Please do your further research, and you may like to accumulate these stocks at each decline or at the current level. I hope you like this deliberation. If you like this deliberation, please do like the video, forward it to your friends and colleagues. And if you're not subscribed to the channel, please do subscribe to the channel. Thank you so much for your time. Have a great day. Jai Hind, Jai Bharat.